Hey Jeff, thanks for joining me.
Hey Steve, thanks for having me again.
Good to have you. We're talking about the state of commercial real estate right now. We've got some new data points. This comes from the National Association of Realtors who track some of the commercial data. Let's start with multifamily. We've got the multifamily sector continuing to gain momentum. We've recently seen mortgage rates start to dip. The second quarter's data is not really going to reflect that. Net absorption was about 2.4 times higher than a year ago, with an additional 260,890 more multi-units leased than vacated. Demand was also higher than pre-pandemic levels at about 44% higher. Despite the demand, we're seeing a record high number of multifamily units delivered to the market. So we are seeing new supply come to the market. Of course, this is all national data, and regional is going to differ. Some of your thoughts on multifam, on just where we're at with it.
Yeah, I mean, I think it makes sense. You made the point about pre-pandemic towards post-pandemic. The idea of I guess it's probably more the ability to kind of work from where you want to work from, and maybe it just opened up people's eyes that they'd rather rent instead of owning to some degree because it's easier to find a place. You have some amenities that you may or may not use, and somebody else to take care of the maintenance that you sure as hell don't want to have to take care of on a house. So plus the rising cost of insurance rates, it makes sense for tenants to want to want to actually continue to rent instead of trying to buy and have to take those ever increasing costs.
Yeah, I mean, I think that's one of the key trends here is we've got record low home affordability. So that is driving some people to rent who would rather buy. It's also driving some people to rent who just see more bang for their buck
Yeah,
than renting. We've seen both those trends that some very upscale folks just prefer the concierge service, the amenities of a really nice luxury place to what they could get right now buying, and then we've got folks that would like to buy but just can't afford to in the current market. Um, but I would, kind of point to what we've seen in multifamily really does differ by region, even by asset class. But we're seeing a healthy market there where there's certainly opportunities as well as certainly some properties you want to avoid. You just have to do your diligence. Yeah, let's turn now to retail. We're seeing retail continue to do well. Only 4.7% of retail space is currently available for lease. That's the lowest level on record. Of course, retail is again a space we've talked about that has some variance between different segments, but some of your quick thoughts on retail.
I mean, I think retail. Look, I think the reality of commercial real estate is that it's segmented or compartmentalized, and I think the idea that retail, for that matter, multifamily and office are somehow just going to remain compartmentalized. They're going to remain the same exact asset doing the same exact thing, for all eternity is just kind of a blind look at the market. I think the reality is that, retail is changing, how people shop is changing. It's becoming an experience more than just a place to go buy crap. And I think it's going to change. And I think the reality is that everybody said retail's dead, and the truth is something like this is, it kind of indicates that it's not dead. It's just changing.
Yeah, I think those are great points. I mean, some of the trends along those lines that we're seeing in retail is like you talked, more experiential. We're the old style department store that you just went into and had multiple brands and stuff. It is
Right.
really kind of dying out. And what's replacing it is more luxury brands that are very experiential, very touch, very, high cost per square foot, where you're seeing sales go up even when foot traffic goes down. You're seeing more stuff that's close by in the neighborhood that might be linked to online where you can order it and have a convenient place to pick it up or maybe look at some of the goods. Yeah, we're seeing a real shift from what retail used to be to something that's oftentimes also, as you point out, experience in with mixed use properties where
Right.
retail is embedded in stuff that's more experiential, the stuff that's more lifestyle, including work live environments. So I think retail is kind of a really kind of an exciting time in a way. For this sector with a lot going on, but it's definitely not what retail was 20, 25 years ago, but a good piece of land you're maybe finding different uses for it, but you're still
Yeah.
absolutely finding uses for it. Okay, the everybody's favorite horror story, Office, which gets a lot of negative headlines, but again has a lot of different kind of forces going on a national level, we're continuing to see net absorption remain negative. More spaces being vacated than occupied, although fewer additional unoccupied spaces in the second quarter. Leasing activity is currently near pandemic levels and about 40 percentage points below pre-pandemic levels on a national basis. Some of your thoughts there.
Look at let's call a spade, right? Like, are, are we talking about San Francisco, New York? Are we talking about these major cities where people are moving out? Well, then sure, yeah, office is a miserable asset to be in. But if you're in areas like Miami or some of the other, Texas, North Carolina, South Carolina, some of these areas, they're in growth mode because people are moving out of, or migrating, let's just call it to better weather, better cost of living, better health. And, they're taking up or absorbing office square footage in those areas compared to staying in major cities in the Northeast and far out West.
Yeah, I couldn't really agree more. I think Office, there's two issues that get a lot of negative coverage. And the one is you do have some areas that overbuilt. And that supply demand, that's always going to be a factor. But the bigger issue is, as you point out too, some of those urban cores like San Francisco, which is really the poster child for um, quality of life, has really slipped, and businesses have left. You've got options. If you don't want your car broken into, if you don't want to be stepping over drug paraphernalia and other things, in Silicon Valley, there are a lot of options, a lot of nice places to be. And then still, Silicon Valley is a very high cost living place. So there's other options around the country for lower cost living where you get more bang for your buck. And I think we're just really most of the horror stories around Office are really around some urban cores that have some quality of life issues. And you've got, as you point out, markets that are doing quite well. Okay, let's just finish this little roundup with industrial. Industrial, we're seeing the sector weaken a bit in the second quarter. Net absorption is kind of losing stream, falling to 41 million square feet. While demand for industrial space reached a record high at the end of 2020 and the beginning of 2022, we're seeing net absorption is now 64% lower than a year ago and 53% below the pre-pandemic average. It seems to be driven by just, you know, it was really killing it. And I think you and I had previously talked about it was just really hard to find industrial space that was a good value back when it was just at record levels. Some of your thoughts on just what we're seeing now in industrial?
Look, I think industrial is one of those sectors that's probably, well, I mean, to be fair, there are others, but industrial is probably more impacted by what's happening in the economy and probably even offshore economy. I think as thing, areas like China have some trouble with manufacturing, costs of manufacturing, and costs of exporting, their manufacturing goods. Having some stuff that's here that where we can do some manufacturing, even just small bay stuff to provide local area um, maintenance or other, it becomes probably a better option. But I think the reality is there was a lot of it that was being built, that was overbuilt. It's going to take time for it to be absorbed. I think it gets there, but it's not the fly off the shelf, um, you know, investment asset that it was a couple years ago.
Yeah, and I would just point to we had this really weird economy due to COVID lockdowns, where for a
Yeah,
while people couldn't travel, they couldn't go to restaurants. So what did they do? They ordered stuff on Amazon. Well, that's good for warehouses and shipping and industrial. And
absolutely.
then when that stopped, all of a sudden they wanted to go out and do things, and that's not so good for industrial and warehouse. And I think we're just seeing more of a return to normal. I think over the long term, industrial is going to be fine because we're continuing to see in the United States, one of the biggest economies in the world, it's going to need industrial space. But I
Yeah.
think we just kind of came out of this very kind of weird period where we had a time where people were just ordering an abnormal amount of things, and the economy is turning to a more kind of balanced good and services mix right now. Okay, if you enjoyed the article, this video, Give us a thumbs up. Subscribe if you haven't. Go visit us at selectfincap.com and register for our free newsletter and to get updates on future commercial real estate investment opportunities. Thanks a lot.
Thanks, Steve.